Assalamualaikum, my name is Siti Mira Zainuddin. Me with other members team will presenting about internal and governmental financial auditing and operational auditing. Firstly, internal financial auditing is a critical process that helps organizations ensure the accuracy, integrity and compliance of their financial operations and reporting. It involves a systematic reviews and assessment of an organization financial system controls and processes to identify any discrepancies, risks or errors for improvement. An independent, objective assurance and consulting activity designed to add value to improve an organization's operations. Help an organization accomplish its objective by bringing a systematic, disciplined approach to evaluate improve the effectiveness of risk management, control and governance processes. The Institute of Internal Auditors Malaysia (IAM) is a professional association dedicated to advancing the internal audit profession in Malaysia. Established in 1977, IAM serves as the national representative body for internal auditors in the country. The primary objective of IAM are to promote the professional practice of internal auditing, enhance the competency and professionalism of internal auditors, and provide a platform for knowledge sharing and networking among members. The Institute aims to uphold the highest standard of ethics, integrity and professionalism in the internal audit profession. ISA 610 using the work of internal auditors is a standard issued by the International Auditing and Assurance Standard Board IAASB under the International Federation of Accountants IFAC. This standard provides guidance to external auditors when they plan to use the work of an organization's internal auditors as part of the audit procedures. The main objective of IS 610 is to establish the responsibility of external auditors regarding the use of internal auditors' work and determine the appropriate procedures to obtain sufficient and appropriate audit evidence. The key point covered by ISA 610 is understanding the internal audit function, assessing the objective of internal auditor, determining the nature, timing, and extent of procedures, evaluate the result of internal audit work. By following ISA 610, external auditor can effectively use the work of internal auditors to support their audit procedures. This collaboration between internal and external auditor helps enhance the efficiency and effectiveness of the overall audit procedures, leading to more reliable and robust financial reporting. The external auditor shall not use the work of the internal audit function if the external auditor determines that first, the function's organizational status and relevant policies and procedures do not adequately support the objectivity of internal auditors. Secondly, the function lacks sufficient competence or the function does not apply a systematic and disciplined approach, including quality control.
Assalamualaikum and very good afternoon to media. My name is Muhammad Saifah. I will present slide 6 and 10. So the first slide, the topic is relationship of internal and external auditors. So I will explain about the types, similarities and difference between internal auditors and external auditors. So for the similarities, there are four main topic that we will discuss, which is the competency, objectivity, methodology, audit risk model and maturity. So for the competency, both must apply knowledge, skills and experiences in auditing. So in auditing, what is knowledge skills? knowledge skill is an auditor requires possessing the technical know-how to draft and organize financial statement before they audit and understand how to organize a company's financials book professionally. So this is to achieve this, the auditor may learn considerably about the client's business. They must study first about the client business, including the industry in which it operates. So the auditor must know what the companies run, the target of the company, what the company want to achieve. So the second one is objectivity. Also, both remain objective in performing their work and reporting their results. So for methodology, internal auditors and external auditors use same method in performing their audit. So first of all, what is audit methodology? A particular set of processes or procedures used to assess a company's financial and business risk. Internal and external auditor may use to review specific information relating to different operations of a company. Audits generally test financial information for accuracy and validity. So we move to audit risk model and maturity. So internal auditors and external auditors is to decide the extent of their test and evaluating their results. For differences, internal auditors are responsible to management. What are the meanings of responsible to management? Internal auditors determining the organization's compliance with relevant laws and regulations, evaluating and making recommendations that can assist in approving internal control, investigating fraud via a fraud risk assessment that use fraud deterrence principles. So for external auditors, it is responsible to financial statement users who rely on the auditor add credibility to the statement. So that's for relationship of internal and external auditors. So we move to governmental financial auditing. It's conducted by Jabatan Audit Negara. The primary source of authoritative literature for performance of government audits is Audit Manual, which is issued by the JAN as a reference. It consists of 5 components, which is financial statements of governmental units, government contract and grants, internal control, fraud, and other non-compliance with laws and regulations. We move to the next slide. Audit Act 1957. So using guidance from Audit Manual, Auditor General is responsible to audit accounts of 5 components, 5 audit accounts, which are the federation and of the states. The second one, fund established in the state or the federal territory, Article 97. So the third one is public authorities. So what is public authorities? Public authorities is Prime Minister's Office, Ministry of Finance, Ministry of Home Affairs, Malaysian Anti-Corruption Commission, MACC, Securities Commission Malaysia, SC, and the last one is Bank Negara Malaysia, BNM. So the fourth one is other corporate bodies in the receipt of a grant or loan from federation or a state. The last one is other funds. So for the audit and reporting requirements, Audit Manual, it's a formal guidelines and to ensure responsibilities fulfilled by Auditor General, the Constitution and Audit Act 1957. There are 5 standard bases for the Audit Manual. The first one is Audit Act 1957. The second one is JAN's practices and experience. The third one is standards used by accounting provisions, and the fourth one is International Organization of Supreme Audit Institution, INTOSAI. So INTOSAI is an intergovernmental organization whose members are supreme audit institutions. Nearly every supreme audit institution in the world is a member in TOSAI, depending on the type of the system used in their home country. The member of INTOSAI may be variously titled the Chief Financial Controller, the Office of the Controller General, the Office of the Auditor General, and the Court of Accounts, or the Board of Audit. So the last one is Audit Supreme, other Supreme Audit Institution, like example ASOSAI. ASOSAI is ASEAN Organization of Supreme Audit Institutions. It's one of the regional groups of the International Organization of Supreme Audit Institution in TOSAI. ASOSAI was established in 1979 with 11 members. The membership of the ASOSAI consists of charter members, and associate members, and now membership has grown to 56 size. The main objective of ASOSAI are basically ASOSAI is to promote understanding and cooperation among member institutions through exchange of ideas and experience in the field of public audit. Then the second one is to provide facilities for training and continuing education for government auditors with a view to improving quality and performance. The third one is to serve as a center of information and as a regional link with institutions in other parts of the world in the field of public audit. The last one is to promote closer collaboration and brotherhood among auditors in the service of the government and the respective members institution and among regional groups. So the last one for my presentation is financial auditing standards. The first one is materiality and significant. Materiality is a concept or convention within auditing and accounting relating to importance and significance of an amount, transaction, and discrepancy. ISA 320 paragraph 11 requires the auditor to set performance materiality. ISA 320 paragraph 9 defines performance materiality as an amount or amount that is less than the materiality for the financial statement as a whole overall materiality. It includes materiality that is applied to particular transaction, account balance, and disclosures. Paragraph 9 also states that the purpose of setting performance materiality is to reduce the risk that the aggregate total of uncorrected misstatements could be material to the financial statement. The second one is quality control. So basically, quality control is a process to provide the firm with a reasonable assurance that its personnel comply with applicable professional standards and the firm standard of the quality. The importance of audit quality control should never be underestimated, as this control will ensure that your audits are always up to date and provide you with optimal value. So the next one is compliance auditing. What is compliance auditing? Compliance auditing is a detailed review of organizations' loyalty towards uphold of the rules and regulations, which includes statutory and inter rules, regulations, policies, and procedures framed by government, local authorities, and also organizations management. So the fourth one is reporting. The auditor must state in the auditor's report whether the financial statements are presented in accordance with generally accepted accounting principles. The fourth type of auditor opinions are, the first one is unqualified opinion, clean the report. The second one, qualified opinion, qualified report. The third one is disclaimer of opinion, disclaimer report. The last one is adverse opinion, adverse audit report. So the last one is audit files and working papers. Audit working papers are used to document the information gathered during an audit. During audit process, an auditor will get all the informations and all the importance info that regarding to the audit job. So all the audit working papers, they provide evidence that sufficient information was obtained by an auditor to support his or her opinion regarding to the underlying financial statement. Three of the most common
Assalamualaikum and hi, I am Azin Abida binti Hashim with student ID 62213220150. I am the third presenter and I am going to talk about the reporting requirement of the Audit Act 1957, which is related to what Huzaifah said in the last part. After that, I will move on to the next part. As you can see, the Audit Act 1957 has 5 reporting requirements, which I will quickly explain one by one. The first one is when revenues collected or money expended in contravention of laws or established policies. That is, the auditor must determine whether all reasonable precautions have been taken to protect the monies. Next is when monies have not been fully accounted for. So as auditors, we should ask ourselves whether the right care has been taken according to the right rules and whether payment were made correctly and are supported by enough voucher or proof of payment. Number 3 is clearly about whether all accounts and other records have been properly and faithfully maintained. Number 4 is when monies has been expended other than purposes for which it was appropriated or approved. And if not, the second question you should consider is whether it was managed efficiently with regard to economy and the avoidance of waste and excess. The last one is when the rules and procedures have been insufficient to safeguard assets and stores, secure an effective check on assessment, collection and proper allocation of the revenues and other receipts, and also ensure that expenditures have been made only as authorized. So to summarize this last reporting requirement, all the rules and procedures mentioned here had to be followed in every way. That's all for reporting requirement of Audit Act 1957. Next, I will move on to the next section. Next, I will talk about the next part, which is about general guidance of auditors. So as we learn Audit 1 and Audit 2, I think we all know that if you are an auditor or maybe you want to be an auditor in the future, you need to first have a good understanding of federal constitution and other basic laws. Next, you also need to have a good understanding of these 3 things that includes the first one, Audit Act 1957, such as what I have explained about the reporting requirement of Audit Act 1957. The second one is about audit concepts like what is audit, how it works, and other things related to audit. And the last one is standard and practices. For example, the basic one that Malaysian auditor must know is Malaysia follows the ISA or International Standard of Auditing. Operational accounting, in a quick definition, refers to the process of evaluating a company's operating activities both on a daily and a broader scale. That means, as stated in this slide, the purpose is to determine the effectiveness or efficiency of any part of an organization. So to clearly understand, I will give you a quick example. For example, in a dry cleaning business, the operation would include all the tasks that goes directly into cleaning the customer clothes, right? So in this case, an operational audit would be the examination of the step used by the workers or the person in charge to finish the dry cleaning process. And of course, there is a difference between this operational auditing and the financial auditing. So the difference between these two can be divided into 3 parts, which is the purpose of each type of audit. The second one is how the report is distributed and the inclusion of non-financial areas. In this section, I will only talk about the purpose of each type of audit, and the other 2 will be presented by the next presenter. As I mentioned earlier, operational audit is a process of evaluating a company's operating activities. So it is quite clear that the purpose, which is also mentioned earlier, is to emphasize the efficiency and effectiveness of an organization. And from the result of evaluation, it will focus on improving future performance. In contrast, the purpose of financial auditing is to emphasize whether historical information was correctly recorded. The easiest example is an examination of the financial statement to ensure all the records are fair and accurate. And from there, the financial audit is oriented to the past. That's all from me. I will hand over to the next presenter to finish this session. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Izzuddin bin Abdul Rahim, and today I will continue the presentation. For the differences between operational and financial auditing based on distributed. So for the operational auditing reports are typically distributed internally within the organization to stakeholder involved in audited process. This operational audit the objective to aiming and improve operation, while the financial auditing reports have a wider distribution scope, including both internal and also external stakeholders such as management, board members, investors, and regulatory bodies, as they assess the accuracy and transparency of financial information. That's why when we do the task of searching for financial statement or annual report, all members or public can access the annual report. Okay, let's continue on the differences between operational and also financial auditing based on inclusion of non-financial areas. For the operational auditing evaluates the efficiency and effectiveness of an organization, operational process, system, and also controls. It focuses on non-financial areas such as operation, management practice, risk management, and also compliance. The objective is to identify areas for improvement and enhance overall operational performance. For the financial auditing primarily examines an organization's financial statement, record, and also transaction. It concentrates on financial area such as financial reporting, accounting practice, and adherence to accounting standard. The objective is to ensure the accuracy, reliability, and transparency of the financial information. Okay, next we move to effectiveness versus efficiency. Effectiveness and efficiency are two important concepts in evaluating performance, and they have distinct meanings. So for effectiveness, the meaning of effectiveness is refers to the degree which an objective or goal is achieved. It focuses on accomplishing the intended outcomes or result. An example of effectiveness is customer service department. For example, the effectiveness of a customer service department can be measured by the percentage of customers' issues resolved on the first call. If the department consistently resolve a high percentage of customer during the initial contact, it is considered effective in providing prompt and satisfactory service. For efficiency, the meaning of efficiency is related to the optimal use of the resources in achieving a given outcome. It emphasizes minimizing waste, reducing costs, or utilizing resources in the most economical manner. An example of efficiency is in the manufacturing process. Efficiency can be measured by the ratio of output to input. For instance, if a factory produces 100 units of a product using 10 labor hours, while another factory produces the same number of units using 5 labor hours, the second factory is considered more efficient as it achieves the same output with fewer resources. So efficiency meaning that we minimizing all the costs. Okay, so this is types of inefficiency. For example situation, acquisition of goods and service is too costly. For the example, bids for purchase of material are not required. The second one is raw materials are not available when needed. Example, an assembly line was shut down for lack of material. The third one is duplication of effort by employees exists. Example, production and accounting keep identical records. The next one is work is done that serve no purpose. Example, vendors invoice and receiving report are filled without being used. And the last one, the type of efficiency is there are too many employees. Office work could be done with one less assistant, for the example. Okay, next we move to relationship between operational auditing and internal control. Okay, operational auditing and internal control are closely linked and have a significant impact on the following areas. The following areas is reliability of financial reporting, efficiency and effectiveness, and also compliance with law and regulation. Okay, we look at the first one, reliability of financial reporting. Internal control ensure accurate financial reporting, and operational auditing evaluates the effectiveness of this control. Second one is efficiency and effectiveness of operation. Internal controls promote efficient operation, and operational auditing identifies areas for improvement to enhance operational efficiency. Okay, the third one is compliance with law and regulation. Internal control helps ensure compliance, and operational auditing assesses the effectiveness of this control for regulatory adherence. In summary, operational auditing evaluates and improves internal control for reliable financial reporting, efficient operation, and compliance with law and regulation.
Assalamualaikum, my name is Cikgu Nurul Najwain Fatihah binti Sarudin, and I will continue for the slide 21 until 25. So I will continue present about the relationship between operational auditing and internal controls. So as we see in the slide, there are three relationships between operational auditing and internal control. So first, efficiency of effectiveness of operation. Operational auditing deals with efficiency and effectiveness of organization. When conducting operational audit, auditors focus on identifying the process taking place, and with the help of the content experts, management, which use procedure to identify opportunities for improvement. Second, reliability of financial reporting. Internal control enhances the reliability of financial reporting and helps to ensure that financial statements are free from major misstatements. It is responsible to ensure financial information is fairly presented and comply with approved accounting standards. Without internal control, business face an array of exposure that can drastically alter revenue generating capability. And the third one, is compliance with applicable law and regulation. The company requires that all employees, officers, and directors comply with all law, rules, and regulation applicable to the company wherever it does business. You are expected to be familiar with the law, rules, and regulation applicable to your place of work and such additional law, rules, and regulation which may apply and of which the company give you written notice. A failure to comply to applicable law and regulation can result large fine to the company. Next, type of operational audits. There are three types of operational audits, which are functional audits, organizational audits, and special assignment. So we look at the first one, functional audit. Function are means of categorizing the activities of a business, such as the billing function and the production function. It also may be categorized and subdivided many different ways into cash disbursement, cash receipt, and payroll disbursement function. Functional audit deals with one or more functions in an organization. As an example, functional audit dealing with the efficiency and effectiveness of the payroll function for a division or for the company as a whole. Next, organizational audit. Organization deals with an entire organizational unit such as department, branch, and subsidiary. It also emphasizes how efficiency and effectively function interact. The third one is special assignment. It arises at the request of management for a wide variety of audits. For example, determining the cost of an ineffective IT system, in investigating the possibility of fraud in a division, and making recommendation for reducing the cost of a manufactured product. So, who perform the operational audits? Operational audit performed by internal auditors and government auditor. So we look at internal auditors. Internal audit department do both operational and financial auditing. It is because they spend all their time working for the company they are auditing. Also, they have an advantage in doing operational audits. They can develop considerable knowledge about the company and its business, which is essential to effective operational auditing. The head of internal audit department must report directly to audit committee and must have access to ongoing communication with audit committee of the board of directors. Next, government auditor. As already discussed, the most widely recognized government auditor group is the GAO, but many state government auditors are also concerned with operational auditing, often as a part of doing financial audits. There are two performance audits as shown in the table. First, economy and efficiency audit, and second, program audit. The purpose of an economy and efficiency audit is to determine whether the entity is acquiring, protecting, and using its resources economically and efficiently. Next, the causes of inefficiency or uneconomical practices. Also to determine whether the entity has complied with laws and regulations concerning matters of economy and efficiency. Next, the purpose of the program audit is to determine the extent to which the desired result or benefit established by the legislature or other body are being achieved. Next, the effectiveness of organizations, programs, and activities or functions. And it also to determine whether the entity has complied with law and regulation applicable to the program. The first two objectives of each of these type of performance audit are clearly operational in nature, while the final objective concerns compliance. Next, CPA firms. When a CPA firm does an audit of historical financial statement, Part of the audit consists of identifying operational problems and making recommendations. Recommendations can be made orally, but they are typically included in a management letter. Next, the background knowledge about client business. Background knowledge about a client's business, which an external auditor from a CPA firm must obtain while doing an audit, provides useful information for giving operational recommendations. Next, clients commonly engage a CPA firm to do operational auditing for one or more specific parts of its business. For example, a company can ask the CPA firm to evaluate the efficiency and effectiveness of its computer systems. Usually, management engage with CPA firm only when the company does not have an internal audit staff or if the internal audit staff lack expertise in a certain area. That's all I want to share with you. I will pass to the next presenter. Thank you.
The two most important qualities for an operational auditor are independence and competence. Auditors should report to the appropriate level of management to ensure the investigation and recommendations are made without bias. Independence is seldom a problem for CPA firms auditors because they are not employed by the company being audited. The independence of internal auditor is enhanced by having the internal audit department report to the board of directors or presidents. Similarly, with government auditors should report to a level above the operating departments. The GAO, for example, will report directly to Congress as a means of enhancing independence. The responsibility of operational auditors can also affect their independence. The auditor should not be responsible for operating functions in a company or for correcting deficiencies when ineffective or inefficient operations are found. While it is acceptable for auditors to recommend changes in operations, operation personnel must have the authority to accept or reject those recommendations. If auditors had the authority to require implementation of their recommendations, their independence would be reduced. Competence is, of course, necessary to determine the cause of operational problems and to make appropriate recommendations. When operational auditing deals with wide-ranging operating problems, however, competence can be a major obstacle. For example, imagine the difficulty of finding qualified internal auditors who can evaluate both the effectiveness of an advertising program and the efficiency of a production assembly process. The internal audit staff doing that type of operational auditing will presumably have to include some personnel with backgrounds in marketing and others in productions. A major challenge of operational auditing is in selecting specific criteria for evaluating whether efficiency and effectiveness have occurred. In auditing historical financial statements, accounting standards provide the broad criteria for evaluating fair presentation, and audit objectives facilitates more specific criteria in deciding whether those standards have been followed. In operational auditing, there are no well-defined criteria. To establish criteria for operational auditing, auditors could define the objective as determining whether some aspect of the entity could be made more effective or efficient and recommending improvements. This approach may be adequate for experienced and well-trained auditors, but it provides little guidance for most auditors. More specific criteria are usually desirable before starting an operational audit. For example, suppose that you are doing an operational audit of the equipment layout in plans for a company. So here are some specific criteria stated as question that might be used to evaluate plan layouts. First, were all plan layouts approved by Home Office Engineering at the time of original design? Second, has Home Office Engineering done a revolution study of plan layout in the past 5 years? Third, is each piece of equipment operating at 60% of a capacity or more for at least 3 months of each year? And many more questions that are stated in the slides. Next, we move to the sources of criteria. To develop specific evaluation criteria, the operational auditor can use several sources including: first, historical performance.
Criteria can be based on actual results from prior periods. By using these criteria, auditors can determine whether things have become better or worse in comparison. The advantage of this approach is that the criteria are easy to derive. However, they may not provide much insight into how well or poor the results are compared to what they could be. Second, benchmarking. Entities within or outside the client's organization may be sufficiently similar to the client's organization to use the operating result as criteria. Auditors should use care in selecting organizations to use as benchmarks. It makes little sense to benchmark with dissimilar organizations or those that perform at a substandard level. For internal comparable entities, the data are often readily available to use as criteria. Outside organizations are often willing to make their operating information available. Also, benchmarking data are often available through industry groups and governmental regulatory agencies. Third, engineered standards. It may be possible in some engagement to develop criteria based on engineered standards. For example, auditor can use time and motion studies to determine efficient production output rates. These criteria are often time-consuming and costly to develop because they require considerable expertise, but in some cases it may be worth the cost. Standards can be developed by industry groups for use by all their members, thereby spreading the cost. Fourth, discussion and agreement. Sometimes, objective criteria are difficult or costly to obtain and are best developed through discussion and agreement. The parties involved should include management of the entity to be audited, the operational auditor, and the entity or persons to whom the findings will be reported.
Hi, Assalamualaikum. My name is Humaira Rosna binti Alias. So I will continue for the last part, which is phase in operational auditing. There were three phases. First, planning. Second is evidence accumulation and evaluation. And third is reporting and follow-up. Okay, for the first phase is planning. Auditors are required to spend more time with the interested parties, agreeing on the term of engagement to set a proper planning. Firstly, the auditor must determine the scope of engagement. Second is staff the engagement properly. Third is obtain the background information about the organizational unit. Fourth, understand their internal control. And the last is decide on appropriate evidence to accumulate. Next phase is evidence, accumulation, and evaluation. In this phase, the auditor must accumulate sufficient appropriate evidence and decide whether it is reasonable to conclude. This type of evidence is similar with what we discussed on Chapter 7, which is audit process, but only these four types of evidence are most common used in operational auditing. First is documentation, whether external or internal document. Second is client inquiry, which are the information from client or response from discussion with clients. Third is analytical procedure, and fourth is observation by assess clients' activities. And the last phase is reporting and follow-up. For the preparation of reports, auditor must follow the requirement of Yellow Book, which include the specific content, but they are freely decide on the form of the report. Follow-up is to determine whether the recommended changes were made, and if not, they need to clarify the reasons why. There are some major differences in operational and financial auditing report. For operational audit, the report is only sent to management, while for financial audit is distributed to external users of financial statement. Also in operational audit, tailoring of each report is required to address the scope of the auditing, the findings, and the recommendation. This is our example of operational audit findings. First is outside janitorial firm. Okay, the costs disclosed were excessive compared with similar service performed by outside janitorial firm. An auditor found that many tasks were not complete and result to unaccepted quantity. So the auditor recommend that the state seek competitive bids and contracts with the janitorial firm submitting the lowest bids that meet the specification. With this, outside janitorial firm can save up to $160,000. Next is use of right tool. A company of vending machine lists about 34 heavy-duty trucks, but only a few used for delivering and pickup vending machine. Others were used for simple adjustment and repair. So, auditor recommend that to replace some heavy-duty truck with conventional light vans, and it result the company to save up to $25,000 a year. And the last is computer program save manual labor. So that's all from me. Thank you.